Hey, what's up, guys? Billy here again, and this is kind of more of like a small Iron Hand video, like part two kind of deal. And this example came up because the one-on-one student I have this week was going over this, and they gave this to me on their watch list this morning. Little watch list of three, and this was one of the ones we reviewed. And now I just want to go over it because there's a bunch of patterns as well as a bunch of little cool Iron Man tips. But just let's go over the small pattern real quick. But first of all, I wanted to show you guys the resiliency of a cup and handle failing. So this is a small cup and handle going right here. When you zoom it out a little, it's like a small cup, and then you got a handle here. But you also have a reverse cup and handle right here. But that doesn't matter. The part that I'm trying to get at is this cup and handle here failed. And normally that would be very bullish continuation, especially on a stock like Facebook. But it was also the spot of a triple top, which is very bearish. So it didn't pass it at all, and you never had a rising volume take you up. See right here, volume started canceling. Volume popped here, which that was just an exciting candle. I don't say it actually did anything there. Reset, fell, reset. Yeah, just low volume into lunch, so that led to the triple top failing. Just the low volume probably didn't help around lunchtime. And then we had all that news come out, so we had a big drop for everything. So the part of the video I really wanted to cover, the Iron Man part, was Iron Hands part, sorry, is he was asking me, what could have kept me in this trade longer. We were kind of referring to just this part of the chart. But I was telling him, I was like, you had he was looking at entering here, and this was a really good bear flag. It fell down. You got your flag pull, then you got your drop, then it goes down to his pre-market low level as a target. So now he has a level to start basing off of. And he started asking me, how would I have stayed in right here? And all I said was that one, it's kind of like a 4 bar play. So this happens a lot. You had it happen. This is technically a 3 bar play. It's just called the bear flag, and you'll see them a lot. Like right here, you almost had one, but it failed and went up. But you'll get these plays. There's 2 bar plays, 3 bar plays, 4 bar plays. This happens. So and it's just continuation is all it is. So what you want to lead to is volume. But check this out. So on this rise right here, I know it wasn't that. It was this one. Sorry. This is where he asked to stay in, and I said, well, it did get to above this on the meat of the bone. It did break above the candle a little, so that would have scared some people. But then your next candle made a 4 bar play. The thing I told him to watch was volume. Look at this. Volume was dropping. So we have volume divergence as prices going up. That's weak. That's a weak movement. So it failed at his pre-market low level that he set prior. And then look at this. He had another 80% confident entry pop up. So this was actually the best entry for him, which he got in at a good time anyway. It's not too early to enter like that. He's a little more advanced, so he's entering off of better levels than just the plain simple system. But what was I saying? Oh, so the volume divergence as well happened here. So you see how price was rising, volume was lowering, just like over here. Price was rising, volume was lowering, and that gave a weak signal that the stock was ready to drop again. And what better place than to do it on an 80% confident entry at the pre-market low? Then you had your rise in volume, sellers, had your reset candle, so that one doesn't matter. Rise in volume, bigger than that one, good. Then you had a rise in volume. So you had good continuation the whole time. And you even had good little signs there like that on volume divergence. And that's a really big thing to go watch. So I don't really know. Oh, the Iron Man part. So you guys know how all that works on the first video. Check this out. So I'll leave all that info there. But also, what could have kept him in is here. So you draw this line, right? Of the breaking candle. So this was the candle he was looking at. Enters. It never came above this line and stayed there. Just because it went above it a little doesn't do anything. Came down here, broke. So now you set another little level, a little wave. Stocks move in waves. That's all they do. Sometimes they move really rapidly, sometimes they're slowly going sideways in calm waters, and then they start moving in waves, but they move in waves nonetheless. So as you hear, you get your another break level. You have it there because that's where it broke down. This is your first wave, second wave. Your third wave would be right here because you have a support. Broke here. And this wick, by the way, when you have a wick on the top side of a candle, that's actually bearish. So if you see that in those types of scenarios where it's above a line like that, then you're probably still in a good position. And volume's probably rising in the next candle, if not the next two. So now you're at a wave 2. Break into wave 3. You caught support here. Might as well watch it there. Bam, broke support there. Now you're in the next wave. Broke. Next wave. Broke. Next wave. Broke down here. Caught support. Never went back down to break into the next wave below. It actually pushed up and kind of went back to this little wave here. This tinier wave. See, all these little links of waves are different. This one's not as wide as this one. This one's wider than the rest of them. This one's the tightest one. So it's just something good to look at. You don't have to draw that many lines, but it's good to have that mental picture in your head as you're looking at the stock price move from left to right. I wasn't going to add any more onto this. I just wanted to go over this one ticker because I was like, damn, man, that's a really good example. NVIDIA, another good example. See how you have your waves? Breaks, 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 breaks. And this is just to help you while you're in a trade. This will help you stay in your trade longer, this concept. There is no just one-stop shop to get good at holding on to trades longer. There's good ways of scaling out. Let's say you have 2 contracts and it starts dropping and you could sell one. Then you want to see if the other one makes more. Then you're not risking as much because you have less equity in there. Scaling out's a really good thing, like I just said. But this concept alone, and over time, if you just, looking at it kind of like that will help you. Watching volume more, of course, because volumes, this is preaching to you. And when you see a wick go above a level like this, it's yelling at you. Like, yo, we just did this twice, and this one's a lower high. We're telling you we want to go down. So it never broke that again. So, and all you had to wait and be patient for was confirmation of volume rising. If you see a candle start breaking below, you want to see if you got some rising volume. That's literally the first thing you should go look at. With your break levels, of course. And I don't even have a single indicator on chart. That whole video was without VWAP. Let's see on Facebook. Yeah, so VWAP only would have helped you to about right here. The rest of the day, it doesn't help you stay in the trade. It's so loose. And that's the second most accurate average line. So, just use indicators as side confirmation, guys. I promise you it'll improve your trading. But thanks for checking out this video. Make sure to drop me a like and hit me up in Discord. Tell me if you like it or not. And I'll see you guys in the next one.